All right, good morning, good morning. So as we usually do, want to start with the market watch. Give me just a second. Kind of off my game. Couldn't use the restream this morning. Seems like it was already being used somewhere. All right, anyways, come on in. Calendar. We have a full deck today. (8:30, 9 o'clock, 9:45, 10, 11, 11:30, 3. I don't really pay too much attention past 3, knowing that I'm going to be done for the day. But if you come in and trade in the evening, that would be something that you would definitely want to be aware of. The Fed is going to be talking today. They are prepared remarks. He's mostly going to be just supplicating himself and taking the beating from them and trying to answer questions in a way that doesn't rock the market. It's a little bit of a dog and pony show, not meant to really convey anything to the public to change policy in any way. And his biggest job is going to be like Operation Don't Rock the Market, right? So yes, he's going to be there. Yes, he's going to be talking. It's going to consume a large part of the day. The market's likely to do a lot of sideways action because of it. And it's just going to make for a real dud on the sectors and especially in the indexes. So on a day like this, we're definitely going to want to play stock pickers, use our scanners, and not try to lean on the sectors as much. And that's going to be the name of the game today. All right. Just like with yesterday, when there are additional auctions, you definitely want to pay attention. If you missed that 11:30 rally out of the market yesterday and you were asking yourself, what the heck was that? And you looked around in the news and you couldn't find a reason for our market to rally yesterday at 11:30, you missed my morning briefing yesterday, where I specifically stated, watch out, there's an additional bond auction at 11:30 and it's very likely to impact our market in a significant way. Boom, boom, boom. I think it did that. Right now, the bonds and the dollar are everything when we're trying to figure out, why is the market going up? Why is the market going down? What is moving our market? Right now, there is no other game in town. So when there are additional auctions, you want to be aware of it, as we have today, which means the lunch range that we would normally expect, the pause during that lunch that we would normally expect, we're not expecting to see it today. All right, so that brings us into the charts. I may as well look at the VIX futures while we're here. You can see that we got a little bit of backwardation. That was kind of nice to see, but it's so far out there that it really just doesn't matter that far out, right? So yeah, we are getting a little bit way up on the other side of the curve, but look at the steepness of the contango. That's still something that I've heard from multiple places that say, wow, we don't even know what to do with this. It's greatly affecting our options trades, I can tell you that. For the expected move, let's just get a little bit of an example of that real quick so we can kind of get some scope. You can see the size of this week's expected move is very large compared to, say, last week, right? Just a rough estimate, just draw a box. from the low to the high. Grab that box, set it on last week's. So you can see that, you know, they're expecting a lot of volatility this week. So far, we haven't done anything. If you look at where we closed on Friday, that's the middle of the box. Then we rallied back up and we fell back down. So we have tagged where we closed Friday. That's what we bounced off of last night. Institutional pivot point. And we're still holding inside of that. So don't let this market shake you up and think that it's very bearish and, you know, that you need to go short and all of that stuff, right? Those bobbing heads on TV that are trying to convince you to take everything you got and get out of the market and all that craziness. There are signs that say you should be, you know, holding a hedge in some way. I'm perpetually short, so I've always got a hedge. I don't really have to approach it from that point of view. All right. It is very likely that we could see a reversion because of this. It happened in the overnight hours. It is very likely that we're going to go back up to where it started, even if we just fall right back down afterwards. We most often see that mean reversion done from low to high and then back to low again, not from high to low and then back to high again, but it absolutely can do that. That was a pretty significant move in a very short period of time. And just like anything else, if you make a significant move like that, you're very likely to mean revert, right? To come back into the average. What we can say for right now is, as much as this could make its move back up, it's going to put us inside day. And it is a very large inside day, right? From where we closed Friday, where we opened on Sunday and ran through Monday, that range is a very large range, and we're very likely to stay inside of it. Which means we're likely to have some pretty nasty price action. Now I say that, but look at the price action we had yesterday afternoon. That was an inside day, and that was very beautiful price action yesterday afternoon. So, you know, I'm not saying that we can't trade it, just that, you know, we have metrics in place to define, quote, one of our trend days. And so it kind of changes the game when we get a really nice trend and it just doesn't meet those other qualifications. It's just trend. We just traded that way. A break to the upside, we're going to be also dealing with the lows from this range back here at the same time. We will deal with the highs of that range around the 40 zone. We get through that, and we'll be looking to challenge the high of yesterday. That would not even put us in a stretched out position. It wouldn't even be significant at that point. We have more than 12 hours gone though. So the idea that we could make, you know, a positive 1% move and come up here, we never want to say the market can't do that, but it's very unlikely that we're going to make such a thing, even with really good economic news. I will say it this way. If we did make a move towards 4,700 today, you would know it. Every single stock out there that has weekly options would be lit up. The indexes would be lit up. Tick, Trend, and AD would be lit up. The markets would be on fire. You would know it. It won't be a slow, subtle grind to 4,700 today. Alternate thesis is that the market does not like the news that continues to come out, and we're going to break 4780 to the downside. I would be dealing with this back here. Likely not going to have as much impact considering how far away it is. Now we could turn on something like weeklies, and that would provide a better context of where structure is at. So these are weekly candles. We are very likely to find structure around 45.50. I don't expect this to go to 45.50 today. I definitely want to make sure I say that. I don't expect this unless we get some economic news that drives us in that direction. And remember, when you're drawing out here, you want to think about a fat crayon, not a sharpened pencil. So it's not to the penny 45.30 to 45.50. It would be that zone, that range right there. Notice the very tight consolidation pattern we got going on right now in the NASDAQ. It also made that move last night. It just responded a little bit better to it. We're getting these higher lows and lower highs, and we're forming a compression, which is a really great visual of a market building up energy. This thing's just winding up more and more and more and more energy. Now, there's no promise or direction, just that there's a lot of energy. Right now, we do know that rising wedges fall to the downside, and descending wedges typically pop to the upside. But asymmetrical triangles don't have an implied direction. The good thing is, if you don't have a bias and you want to just let the market give you a trade, let it break out, and that will give you the trade, right? If it breaks to the upside, it's going to have to deal with this pivot. Very likely it's going to Busby. If it breaks to the downside, it's going to have to deal with this pivot. Very likely it's going to Busby. Either way it goes, you could let it break out of the triangle first and Busby. Now, since it is a compression play, it's likely a momentum play, and that means it's also likely not to want to give you a Busby. So the Busby wouldn't come home. It would just deflect off of that pivot minor, and we would be looking for a soft rejection or a hard rejection. Momentum plays very often are not going to pull back. And in fact, if you see a pullback in a momentum play, you probably don't want to take it because it's probably not a pullback. It's the difference between buy low and sell high and buy high, sell higher. A break to the upside through that level will put us challenging that really beautiful flag yesterday afternoon, that nice tight consolidated price pattern up there, and then we'll deal with the high of yesterday. That high of yesterday is a significant level of resistance that we have yet to manage through. We don't yet know if we've absolved all of this liquidity back here, and we don't know how much more liquidity we've now maybe piled onto it after that move yesterday. So we do know that the next time we get there, it's very, very likely going to take at least one rejection like it did here. I guess you could consider that a mild rejection. It was slightly significant, but it paused back down at the low of the range. If it was a major rejection, it would look a lot more like this, that it got to the top of a level and it just took a smackdown, and that smackdown didn't stop, right? This is a real rejection, a hard rejection versus something more of a soft rejection. It's very, very likely that the next time we reach that level, we're yet again going to have another rejection softly. We've got to absorb and deal with all of that liquidity. Will it be today? I don't know. We're still looking on the economic data, right? That's the game plan for the day. To the downside, it'll be the same thing. We'll have to resolve this Globex low, yesterday's low on the intraday, and then yesterday's low in the Globex. Those are two different values. Make sure you mark and trade both of those appropriately, right? It's not just quote yesterday's low, regular trading hours low and Globex low. Okay, so you can see that the dollar faded off and the VIX popped. This is significant to pay attention to because we don't always know what the dollar is going to be used for, right? Sometimes the dollar is global risk, and when we see that, we recognize that it's like a new VIX gauge. And then there are other times where the dollar is disconnected from risk. And right now it's disconnected from risk. We can see that risk went up, that the VIX went up, and the dollar went down. So the dollar is not coordinated in any way right now with the VIX. That can most definitely change. It can change at any point through the day. The bonds, on the other hand, are moving, and it was those moves in the bonds that caused this to happen. So we definitely want to be keeping our eye on the bonds. The dollar always, right? We always want to keep track of these two markets, but it's the bonds right now that are likely to give an early warning or a signal, especially if, if we're pressing against resistance and we're wondering if it's going to break out, or if we're resting at support and we're wondering if it's going to break down. So either one of those can often be signaled on a day like this early by seeing which way the bonds are going to break. So if the bonds are at support and the ES is at resistance and the bonds fail through that support level, it's very likely that the S&P is going to break through that resistance level, and vice versa, right? If we're at support and that's at resistance. So use these tools. They're going to be invaluable today. We were very bifurcated yesterday. We were in a very divergent market. We had two markets that were making extreme negative moves and two markets that were not, right? The Dow and the Russell were just falling like a rock in water, while the S&P and the NASDAQ were holding their own very nicely, right? They weren't responding to that negativity, and neither was the VIX. So during that aggressive fall yesterday, as bad as it may have looked, the VIX gave us that signal that said, just take it easy. It's not that bad. It's not picking up steam, and it's very likely not going to continue. And it didn't. Turned around. So use these tools to your advantage. There's some of the best indicators that you could put on your chart. Price action. So we got the S&P 500. We want to adjust this because I don't want to look at 500 names. Use the filter, knock it down near 100 names. It's not always an easy thing to do. Yesterday, I couldn't do any better than 97. No matter how many times I clicked, I couldn't get any better than 97. So 97 is close enough. Since we're doing this by market cap, it's the largest market cap names in the S&P 500, and we're basically looking at 100 names. From this list, it's very dull with all of this gray, and that's because it's only going to change colors if price gets to 0.5, but we can adjust that. So we come up here and we give it a more nuanced color change rule. Now it's a little more lit up, right? So from here, you can see we are risk off, that we've got red on the screen and a lot of negative markets out there, a lot of negative sectors out there. And keep in mind, with all of the economic data on the table, it's very likely not going to be a day that we can run the sectors, right? We're not going to be looking for index plays and sectors plays. We're going to be wanting to run our own watch lists and trade right off of those, right? This is a day that you have to be a stock picker and not lean on those sectors. You can see in the extended hours, we have very few names that are in the green or negative that are just flat. On those names that are positive, it is worth taking a look at where they are, right? What industry that is, industry or sub-industry. It may give you an idea for the day. Unlikely though, and I don't know that I would follow it through. We want to set this to the NASDAQ 100. Again, we want pre-market change percent. We don't need to use a filter, but I do want to adjust the color scheme again. We got a little more green here than we do in the S&P. It's worth noting that the NASDAQ 100 does not have financials in it, while the S&P does. And moves in the bonds affect the banks, right? Bonds go down, interest rates go up, banks love it. Bonds go up, interest rates go down. Banks don't like it, but technology likes it. So we've got a mixed bag here, more red than green, but there is some green out there, including entire sectors like utilities. Now, old school talk will focus on utilities and say that it's a safe haven, that it's a risk off sector. It's a sector that we expect to do good, even in a bearish economy. Just keep in mind the phrase that is used in there, because we're not in a bearish economy, right? We have a very robust economy with very strong demand. It's a supply chain issue. And then there's a labor force issue. And then there's the corona issue. It's not a bearish economy. So those old school antiquated ways of approaching the sectors and saying that the utilities is a place that will do good even in a bearish market, that's great. We haven't had a bearish market in 20 years. So you got to take that with a little bit of grain of salt. It's not a safe haven, by the way, because if you go back and look at what happened during the coronavirus, February and March of 2020, utilities crashed just like everything else crashed. And that's because all of those places, all those hedge funds were getting run on redemption, and they had to buy the utilities to give people back their money, right? They had to close their utilities to give people back their money that were running redemptions. So they have to sell to raise capital to give somebody their money. And of course, somebody else sees that and sees the selling and says, well, I better sell before I can't get my money. And so they sell, and it just causes a chain reaction. There was no safe place, no safe haven. Gold fell, utilities fell, healthcare started to fall. It was one of those quick to rebound, but everything fell, right? So when they start running redemptions, there are no safe havens. The screener, how many names are up? We're going to flip that around and say, how many names are down today? At least 1% in the NASDAQ. 15% of the NASDAQ is down 1%. All right. I mean, that's not bad. Let's do 0.5%. 40% of the NASDAQ is down 0.5%. That's feeling pretty good. We're likely to see these markets hold the range, maybe get a little weak, but not crash and burn, right? We're not in that kind of market. So don't freak out. Just kind of take it easy. If you have opportunities to get out of your swing trades with maybe a little bit of hurt instead of a whole lot of hurt, maybe you take that opportunity. Or if you can hedge against the trades that you're in, maybe give up a little bit of that upside profit for a chance to add a little protection. It'd be a good time to be thinking about these things. For the S&P, how many names in the S&P are down at least 0.5%? 65% of the S&P is down this morning, more than 0.5%. That's bearish in nature, right? There's no spin to that. There's no way to make it feel good. 65% of the S&P is down at least 0.5% this morning. How many names are down at least 1% this morning? S&P is 35%. 35% of the S&P is down more than 1% this morning. That also is very bearish. From the way that I like to do business, I immediately start asking the questions, well, which ones are down the most? Is it reflation, stay-at-homes, reopenings, right? They got all these fancy names now for these different categories of stocks. Is it the reflation names? Is it the stay-at-home names? Is it the reopening names? Is it the travel names, right? Kind of look at it from that point of view. Now, there was some talk yesterday about airlines. Yesterday in the evening, I was listening to Bloomberg Asia, and they were talking about, airlines, cruise lines. And then there was something about the, I always forget the name of it, but the gambling place, that monster gambling place. Somebody got arrested. Bad things are getting worse. They said that company's stock was down like 400%. I don't even know what company it is because I'm not interested in trading in casino names that much, other than like Las Vegas Sands or something. So sectors, which sectors are down? Energy. You're right, because I used two different ones. Finance, we already knew that. We can see that just from the way that the S&P is getting kicked in the face. The airlines, industrials, China, emerging markets, and then it starts to turn around and go the other direction. Building materials, consumer staples, utilities, metals, which is a little bit of a surprise after what we saw yesterday, and then technology. But recognize that most of these that we were talking about are basically flat, right? Building materials is up 0.5%, and that's the only one that even looks remotely good. XLP, I mean, yeah, it can come back around. Consumer staples, it'd be nice to see that, right? But it's only up 0.25%. So, just keep it in perspective. That's not where I wanted to go. Right, airlines, all negative. Crypto, mostly negative. Right, we got like one name that randomly did good. Microchips, all negative. EV markets. After that phenomenal move in the EV markets yesterday, they're all getting caught flat-footed now. Negative. Pot stocks, negative. So you can see we really just don't have anything really amazing to lean on. Now, on a day like this, when I talk about we have to be stock pickers and we have to go in and kind of pick our own plays, to me, it means we're going to be leaning on the weekly options list, right? If you are on Thinkorswim, you can sort your scanners by things that have weekly options. And there are around 600 names. Now you can shorten those names up, the list up, if you were to eliminate things like ETFs, ETNs, because it has double and triple leveraged products in there, some VIX products. You get rid of that stuff, you knock it down to like 550 or so, maybe 540. That's a smaller list. It's a little more manageable. And then start cutting it down by perhaps cost, right? Amazon, for an example, is a hard thing to trade. It's just so darn expensive. So maybe you would not put Amazon on your list because it would be outside of your scope, right? InBev, for an example, is too cheap. Perhaps you would take that one off of your list because it's just too small of a market to trade. So you can find ways to whittle this list down. I like to leave it untampered with. So this is all 600 markets in these two lists. And you can see there are plenty of things today that we can trade. Names that are up a good 0.5% or more. Good names, Twitter, Netflix, Boeing, Raytheon, Shop, right? It's good names to trade. There are plenty of things out there this morning that we can hammer down on and have a really good trading day. Just keep in mind, with all the economic news on deck, the clock is something you want to pay particular attention to and be prepared for a market to just flip over on a dime when the clock strikes the hour, right? Just be prepared to that. Take your profit, leave your runners on to run, protect yourself through the day, and don't think that you can just ride a move through its entire day today, because it's very likely not to do that. So what I got for you guys. Have a good day. Be safe. Be careful. I will be putting out some trade ideas for some hedges and perhaps a broken wing butterfly, or maybe even a skewed trade like this. That thing readjusted while I was streaming. This is the trade that I posted or presented live to Benzinga during their options boot camp. I really like this trade. It's got phenomenal, opportunities, and it's so adjustable. You can do it so many different ways, very low risk, and then you can convert it after you're in it. It's a great thing. So I'll probably be posting some trade ideas on how we can use this for the current market environment.